All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for October 27th. So, this is an example of the Kata 2 challenge by Griff Cooper, who's survived and graduated from the systems design course and turned the Kata 2 challenge into a robust, workable system that he's now got a great home study course on, along with the applied system development course and the Thinkorswim platform with the owl and the tortoise and sniper style screen layouts for you. So that thing is bulletproof and ready to go. You can see that he's got a Kata 2 entry here after this double top, which nets him a half an R. He plays the stop and reverse on the PSAR flip. That fails quickly for minus 0.81. That's a stop and reverse, and that just takes off. In the advanced course, we would be looking at adding second positions here and here on the automatic 2R entry, but he uses a recommended 1R trailing stop here and gets the benefit of this beautiful move. Net 6.48. If you use the advanced entries, you probably pick up another 4. So there was anywhere from 6.5 to 10 was available. So nice work from Griff. On the intraday sniper in meta, my brother plays standard work entries on a Kata 2 for 1.4R, plays the RLXD, regression line crossing the dragon, standard wrist box, enters a second position at the automatic 2R as it's breaking through the PSAR. That scratches shortly afterwards for another 2.4. So he's got about 3.9 into it here. Takes the dog for a walk. Good time. He gets the RLXD on a Kata 2 entry. Note the lower highs. He adds a second position at the 2R battle drill, another position at the 2R battle drill. Notice the power of the PSAR, the way we've configured it, and he comes out of here with another, let's see, 5.7, 6.9, so 10.8 for the day on meta, and then finishes up the day with Boeing, which we highlighted last night. And in a 45-minute segment, he brings home 10R with standard work. Here's the 2R battle drill second entry, and he's out for 5.6 on this exit. We increment in and then all out. He gets the rebound play, so enters, second position automatically, standard exit for another 4.5, and that's 10.1 in 45 minutes with managed risk. Well done, brother of mine. Here's my modest contribution to the sniper trade of the day. So we're looking at Cliff Natural Resources because, as we said last night, the metals are in play. So there is yesterday's close. Here's a OR3. It breaks down, so we're short with a standard risk box. We had a second position on about 3R. This is so vigorous in the morning. I don't like to automatically 2R it, but you can do that. Notice it bounces back and then rolls over, and then as it takes out the previous low, that's when I decide on confirmation to put in the second position. I take a standard exit at the edge of the dragon. That nets 5. The RL10 never gets through the dragon, and that's the importance of treating the RL10 as price and not chasing your shadows with price. So this rolls over, so we get a Kata 2 entry to the short side with a standard risk box. Second position automatically. Cover at the edge of the dragon once more for another 2, so we're into this. We're up about 7 on this one. We try the supported spring crossing with a standard risk. Quick half-hour loss. It reverses to the upside, so I re-enter basically the same trade. Now I end up taking a full 1-hour loss. That was a stop and reverse, which gave back about half an hour, which I didn't even count. The SSC a second time, standard risk, another half-hour loss. A Kata 2 entry with standard risk. You just keep firing. This one pays. When it clears the previous noise, which to me looks like, this whole series through here, when that clears and we've got about 2 hour in hand, that's just a natural re-entry, or a second entry, I should say, on our 2-hour battle drill. Standard exit for 3, and so that's a total of +8 in CLF. So we're up 7, -2, +3, netting 8. Standard work, 3-minute charts, the daily sniper trade of the day. That's a little bit redundant. All right, let's take a look at the markets. On the market 150, we've got some topping action continues. Yesterday's little doji resolved to the downside. We were concerned about that. We're still in the bottom third of the 150-day range, which has a high and a low. And so we're right at the 1/3 mark, but vulnerable to the downside, remembering that we are in a bearish normal. On the 30-day, you can see that yesterday we highlighted the fact that it opened, pushed to a new high, but then closed weakly. And we said, caution, alert, this had a micro gap, slight bump up, and then closed poorly. And so now we got this 1-2, the first 2 bars of a 1-2-3 to the downside, closing at about 380. So you got price levels of the 2-day low, top of the dragon, spine of the dragon, bottom skin of the dragon, 5-day low, belly of the RL10 and tomorrow's PSAR, and then the last line of defense, this double bottom in the RL10. So if this one breaks, then it's a quick run down to the 150-day and 30-day low, which is down here. And remember, this is not much support at all. There was just 1 day of panic selling. So this is really the last bit of support that there is based on the statistical treatment of the RL10. That's where the last line of defense actually is. On the 30-minute chart, we're looking at the 5-day look back and the 10-day look back. And so that 3.5-day run up to here is now vulnerable to a Kata 2 to the short side. You can see that this could not even get through the dragon. The PSAR is holding, and it closed poorly. And the next support level is here at about 375. And then that's not much support at all until we get down to about 365. So if this thing breaks today's low tomorrow, I am short in a hurry with a second position here and a third position here. And if those are working, it's going to get down to here. So that's what a bear normal opportunity looks like. Now, the upside is that you would also routinely treat this as a Kata 2. So if it can break above the PSAR flip with that little risk box, you've got 2 units of reward just to the 10-day high. So risk 1 and aim for 2. So this is really an important price region right here. That this is not evidence of panic selling yet. If it breaks tomorrow on a Friday, you'll see some panic selling. But this looks like a tactical opportunity to the top. Now, tomorrow, if I see that move, I will try to exploit that in the tactical space, but I would not hold any of that over the weekend heading towards an election and shenanigans unless this gets above the critical 10-day high. If it gets above here in a strong sector, I might keep 1/5 of the position, pay for it with markets money, and then hold that. But 8 times out of 10, I would not do that. I'm really just going to concentrate tomorrow on exploiting that tactical space between this yellow zone and the 10-day high. I'll be looking at the usual suspects for opportunities too. Nothing different. All right, let's take a look at the sectors. All right, we've got our benchmark S&P here, was down 0.53. Emerging markets were weaker at minus 0.78. The Qs were the weakest at minus 1.82. That's not encouraging for the market when your tech leadership is below the sea level. Here's the cut line between winners and losers. Notice to the upside you got the Russell was basically flat, but at least in the green. Diamonds were decent at 0.65. Quite a distinction between the S&P minus 0.5 and the Dow plus 0.65, and that tells you just how bad tech was. And then Treasuries gained another 1% and are now getting close to testing the support level at 100. We're going to check the downside because I think that's where the easier opportunity is tomorrow. Again, S&P benchmark at 0.53. So we've got agriculture, Aussie dollar, clean energy down to 0.72. Oil exploration, tech, biotech down to 1.23. Lithium and ARC Genomics at 1.4 and 1.7. The VIX still surprisingly not showing any urge for portfolio insurance at a premium, so that's down 2%. That's why tomorrow is going to be an interesting tactical day. Uranium, Ethereum at 2 and 2.4. You've got marijuana at 3.1. The FANGs at 4%. And now individual companies. You got Cliff minus 5.7. Intel 3.45. There's Intel. Yeah. Apple, Alcoa, and U.S. Steel, 2.4 and 3%. So there's our metals. Metals continue to reward us for paying attention. You got Cliff. You've got U.S. Steel and Alcoa, all considerably weaker than the market. So the metals are certainly in play. That's my number one target tomorrow, my number one receiver if I were a quarterback. Apple off 3%. That hurts. Microsoft off 2%. That hurts. Coinbase 1.8, PayPal 1.36. Here's two of our three semiconductors. Texas Instruments 0.7. Intel 3.45. So a lot to choose from tomorrow for weakness. And those are all key leaders. So this was broad-based selling pressure today. Now, to the upside, the I'm just noticing right off the bat, I was looking for NVIDIA. That's a really important distinction between NVIDIA in the semiconductor space and Texas Instruments point 0.7, and then Intel was much lower. So really, it's NVIDIA really shook off the tech weakness and the semiconductor weakness, and it was amazing. So that's one to keep in mind as a particular company target. All right, back to the Bitcoin 0.4, consumer discretionary 0.4, Mexico wood materials, precious metals, the other lumber, and ARC innovation between 0.5 and 0.4, 0.05 and 0.4. And you have staples, blended commodities, and U.S. real estate finally into the green here between 0.08 and 0.18. You've got commercial real estate 0.81, finance 0.8, oil 0.9, Brazil 3.3. Individual companies that are looking stronger from today. Squarespace, a real distinction between Squarespace and the other financial disruptors. You've got Robinhood 0.72, Tesla 0.2, Rivian 0.17. So a reasonable set of alternate sectors, mostly are in the materials piece. That's why I think we could really see something in the metals if it tries to catch up to the material sector. So we need to be mindful of that. All right, let's take a quick look at the reports, and then we'll hit the rest of the traders' work today. Let's see, Zoom. All right, let's go to dashboard number 1. Bearish normal. The 2-day weakness is prominent. There's still some residual intermediate strength from the bounce, but that's really being undercut by the shorter term weakness going into the weekend before the election. The risk Z just went into risk on, and that may be predicting a relief rally no matter who wins the elections, because the uncertainty will be over, and that will be a relief rally. So it's warning us to be prepared for that. Diamonds and Europe also on a warning for dead cat bounces with the short rules of the overreaction system, which has been a reliable helper there. Look at the consumer staples that are in the min pain. Walmart, Procter & Gamble, McDonald's, Johnson & Johnson, and Coke, the opposite of tech. Whereas Microsoft, Boeing, Intel on the max pains. So those are certainly some plays to the downside. Dow Tactical, lots of dojis today, as the market is considering what to do before the weekend. A handful of warning signals in the overreaction system. We're so close to the 10-day high that only Microsoft is on a favorable auto framer at 2.2 to 1. Notice the strength in Merck just continues to crush with a 1-day score of 1.6, just dominating. McDonald's in pretty good shape here with a 3.25 day, a breakout to the upside, and Caterpillar in the industrial space with a good day. So there's some momentum to the upside for you. It's good to know who the leaders were in this phase once we get genuine bottoming action in place. Here's our Dojis for the day in the ETFs, a handful of warning signals. Nothing on the auto framer, only one breakout, and that was in oil. Um, this is everybody in the world biding their time, waiting for the election results to see which way this thing's going to lean. And the farce that is the Pennsylvania election, it's somehow fitting that that's the one that's going to tip the nation one way or the other. Man, yeah, keep watching Brazil. Only Microsoft out of our entire stack is on the auto framer at 2.2 to 1. Plenty of squeezes from today's relatively narrow range. And so the ones that immediately get my attention would be Coca-Cola, Staples, and healthcare. I like those. Alcoa, I'm sold. Materials, and the S&P itself, along with the mid caps, is in a. You got energy, the S&P, diamonds, and real estate all tightly squeezed. That whole market is waiting with bated breath for the election. So I wouldn't be swing trading at all. I'm going to go back on my other comment. I would not be swing trading here at all. Let it settle out. What's your hurry? In Sniper Land, standard targets in the mighty Godzilla, King of the Monsters, none in the tactical symbol set. We got a handful here that are genuinely enraged Godzillas. We have a couple that are starting to wake up. So there's some choices in Godzilla Land. Looking at the shorter term volatility, some amazingly large moves. Again, these are all better than 3 to 1 on the Z score for one day in that whole stack. And the ones that were large today and large for the 5 days seem to me to be the preferred targets. Although you got to love international paper as a sexy growth stock. Not much of interest in the most quiets. These are all pretty much quiet and quiet, with the exception of UDR, which had a little bit of a baby move. Some strong moves among the volatiles here. Again, I'm looking for the double greens. Comcast with a 4.29 one-day move. Interesting. Standard sniper auto framer stats for the tactical set and the sniper stats for the tactical set. Brazil, as my brother said, double whammy on the 5-day and 1-day volatility. And notice it looks very much like a the fence sitter. It's right in the middle of his 150 and 30-day and is oversold on his 1-day and is making large directional moves. That's what you like. And then Intel with a large move today while still being static for the 5-day. So I like Intel for that reason tomorrow, along with the other semis. I mean, I would prefer NVIDIA because that had a really anomalous move to the upside today. So if it's an upside case tomorrow for tech and semis are doing better, I'd go NVIDIA first, then Intel, if I had to choose. The multi-time frame NDX summary. There's your long-term winners. Merck, McDonald's, Caterpillar, great American companies. The energy sector with ExxonMobil and Chevron, and Devon Energy not far behind. No-brainers. Johnson & Johnson's not bad. Oil making a strong play. But again, tomorrow's a tactical day. That's everything on one of the daily reports. We'll take a quick look at the traders. minimize the window. I had to find it on my screen. All right, here's Nolan. Looking at Brent crude on the 3 minutes. If you're beginning here, man, we got to be smashing that. After this breakdown and collapsing dragon, we're still in early days. I like that move. At least we got to a scratch. That's a reasonable second shot. But if that doesn't work right away, you've got to be out of this as it crosses the dragon, and that's a stop and reverse all day because you're thinking it's going to get back to here. As it is, this is getting in late and then staying way too late. We got to, when that fails, we should be getting out right there at the edge of the dragon. And then I like that as a short and a cover. And I don't mind this as a long, but you can't let it get all the way down here and eat a full loss. But this is a good short, and I'd like to see you get paid after a couple false starts. That's a pretty good entry and a great exit in there. So there was room for big improvements here and there. Need you to build up your cardio so that you can make those quick changes. You're still kind of emotionally invested in the trade, and that's taking in a toll on your energy. And part of that is you got to be ready to trade 5 minutes before the market opens. We have got to crush this. If you're watching that at all, the UK 100, that's got to be on your watch list on the side. And when it starts making that move, you should have alerts that are taking you into the position when it breaks above the hump of that PSAR and the dragon. You knew where that was yesterday, so we know that this is a signal, and you know what your standard risk box is, and a move off the bottom, that should be on your radar screen. And then this becomes a second position here. Actually, you should be getting out here and then re-entering here. That's still not bad, but after a move of this much, you can't let it come all the way back in here. We gotta be locking in the no lose. This is a reasonable effort on the upside because you have a Kata 2, and we should be out here in short, and then we would scratch. So this should have been probably +1 on net with those improvements. That's Griff's Brazil. Woj on his trio of Devon Energy. He got a little taste on it. He missed this because he was deep into the Aussie dollar. Tries a quick short, gets reversed out of it, and then misses all the heavenly glory. And then this one here is one I think you got to get because you have this massive sell. It bounces and never gets to the VWAP and rolls over. It comes through the dragon. I think that's the trade right there that you got to be on. You know, this is hard because of the volatility, but by this time it has settled down. So just take a look at that. I want you to feel the energy diminishing and it's just failing in a normal way. That's the trade I want you to get. This is a good entry on the long side here. Exit, stop, and reverses back in, gets paid. And then we let it come all the way back to here. And that let us be negative on XRP. So we got to do better to preserve. Luna, which has been a good friend of his, gets a -1 in here. And then the Aussie dollar he smashes for 5. Gets paid, gets paid, gets paid, gets really paid. We should be having a second entry right about here. And that would scratch, but at least we'd gotten paid. If you were mentally tired, that would explain why we didn't get this one. And then his buddy Solana gives him 6. You got to be a Solana trader, is what I'm thinking. So here's there's a 3 that pays for those 2 losses. Quick scratch, quick gain that pays for that one and keeps +1 gets paid 3. Not even getting this one when you were in a meeting, of course. But that's still pretty good work for 6 and an 8.5 day. Finding the movers and exploiting it. Well done. And then my brothers too on the on Boeing and Meta. So we're in discussion for updating our trading books for the foundations, the sniper, the owl, and systems development. We're meeting the authors support team tomorrow, and you should be on the lookout for some good opportunities with the new workshops that those are going to spawn. So more to follow on that. All right, that's everything I got for you guys today, and I'm getting ready for the day tomorrow. I'm giving a keynote lecture at an academic conference to a bunch of doctoral level researchers at St. Mary's University here in Leavenworth tomorrow. We're going to be talking about creativity research and the payoffs that we've seen in the research and in practice from the Fletcher treatment for creativity for soccer players, soccer coaches, military officers, and our traders. It's going to be a pretty amazing presentation, and I would encourage you guys to get on board with that course. It takes a while to do it, and you got to get saturated into it, and you can start it tomorrow. Tell me what I got to do to get you in that course. You tell me what price you want to pay for it if you're in the sound of my voice in the next 24 hours, and I will honor that price. Can't believe I just said that. But there you are. And we'll see you guys tomorrow. That'll be for the first 5 guys.